Mr. Chair, members of the committee, so we'll just do a walkthrough here through the A18-0818 delete everything amendment. That's this year's property tax division report. The first article is Article 1, property taxes. The first section is the Agricultural Historical Society property exemption. And that is slightly different than how it was heard in committee. It's down to 40 acres, and I believe it was 50 acres when it was originally heard. Section 2 is the exemption for licensed child care facilities. That has also been changed slightly from how it was heard. The exemption has been modified so that it applies to licensed facilities that are operated by a church organization as part of its mission. So that was new language that came in after the hearing. Section 3 and 4 are the Representative Anderson's bill regarding business entities and how property owned by, or agricultural property owned by two different business entities can, under certain conditions, be linked together for ag homestead purposes. One key difference in how that appears in the division report versus how it was heard in committee is that the familial relationship requirement was narrowed from requiring third degree of kindred familial relationships to second degree of kindred familial relationships, which takes it from the great-grandfather level down to the grandfather to grandchildren level. Section 4 also includes provisions related to property owned or agricultural property owned by two different trusts. And this was a bill from that this committee heard in 2017. I believe it was a Knobloch bill. And that does something, or what that provision does is it allows property owned by two different trusts to qualify for ag homestead under certain conditions, namely the two trusts, the grantors of the two trusts are typically spouses or one is a surviving spouse and the other is a deceased spouse. And that also carries over into Section 5, that the Knobloch Agricultural Homestead for Trusts bill. Section 6 is another provision from last year relating to homestead resorts. And that allows property that's owned by, or well, that allows a homestead that's titled in the name of an owner of a business entity that owns a resort to qualify for resort homestead status. And that was a provision that this committee heard last year as well. I believe that was a Representative Bliss bill from 2017. And then I think I'll pass Section 7 over to Mr. Hines.
Thank you, Mr. Kleiman. Mr. Hines.
Mr. Chairman, Section 7 is two different changes in the classification of agricultural property. One is a bill of Representative Hertas, which allowed that if a parcel of property had 3 acres or 10%, whichever's lesser, I think. It says greater in the sum, I think it's actually lesser, to be could be used for environmental purposes such as buffer strips or retention ponds, and the property would still qualify as agricultural. And then there's a second provision in there that came from Representative Clark Johnson's bill dealing with a particular constituent of his that had have a farm with a bad situation with regard to erosion and wanting to construct a holding pond and worried about losing their ag classification. So there's a specific piece in there that's aimed directly at that, narrowly at their situation, that would allow them to retain their ag classification. Section 8 deals with this is the bill from Representative Gruenhagen Regarding craft houses, that bill came in as putting them in with the bed and breakfast classification, and after some negotiations, now it's been changed to instead put them in the resort classifications, to conduct indoor craft activities. Section 9 is Representative Bliss's bill that would allow gas pipelines in certain circumstances to be excluded from the state general levy for 12 years. These would be ones that were serving areas that have lacked access to natural gas up to now, just for new systems.
Mr. Chair.
Thank you, Mr. Hines. Mr. Klayman.
Mr. Chair, moving on with Article 1, Sections 10, 12, 13, 14, and 15 all relate to Representative Bennett's bill regarding abatements of the state general tax for certain qualifying medical facilities. One change there is that the federal reference under which the underserved areas are defined was changed to include, to switch from defining it according to health professional shortage areas to medically underserved areas. Section 11 is that's a bill relating to tax forfeiture and the manner in which the Commissioner of Revenue can turn over a deed after a tax forfeiture sale. And that allows the deed to be provided to the county while the closing process is still undergoing, instead of having to wait until after the sale is closed to transfer the deed. And then I'll turn it over to Mr. Hines again here.
Thank you, Mr. Hines.
Mr. Chair, Sections 16, 17, and 18 are Representative Detmer's bill, which would allow an agricultural preserve to terminate immediately if the property was being purchased by a public entity for park or trail purposes. Section 19 is a provision that extends the levy authority of the Northwest Minnesota Multi-County Housing and Redevelopment Authority by 5 years. Was going to expire in pay 19. Now it expires in pay 2024. Moving on to Article 2. Article 2 consists of two bills from Representative Whalen that are spurred by the Property Tax Working Group report from 2012. House File 3276, which was the residential classification reform, and 3277, which was the changes in the calendar of property tax deadlines and events. And I think maybe rather than go through that section by section, although we can do that if the committee would like us to, because the two bills are intertwined, and Mr. Klayman can speak better about the one and I about the other. I think as far as, if I could speak first to the residential reform piece, there's a table on page 9 and 10 that sort of summarizes best what that bill does in terms of classification labels and class rates. And it's basically that the changes from the original bill that was brought forward is that this bill, this proposal now has dropped the inclusion of non-commercial seasonal recreational property into the residential classification. So non-commercial seasonal recreational, the one we usually refer to as cabins, are no longer brought into the same classification, and they'll retain their separate classification. They'll continue to pay the state general levy. That was a big cost item in the original bill. So that's a change. And then the other change is that bed and breakfasts are kind of being treated differently under the proposal, in that some of the bedroom units are being included with the residence homestead. And in the original proposal, the idea was to just include 2 units with the homestead as part of the homestead, and now that's been expanded to put 4 units in with the homestead. Other than that, it's pretty much that bill as originally brought forward, And like I said, there's been a little bit of change in some of the nomenclature of the classes. And if you look on the table on page 9 and 10, the italicized things are what have changed. And you'll notice there hardly any classes have a different class rate. They're almost all the same. A few of them maybe get a small break, like particularly the 4B1 classification, residential non-homestead 1 to 3 units. It's really 2 to 3 units is mostly what it is there. They do get a break from 1.25% on their first 500,000 to 1%. That's duplexes and triplexes primarily. And then in the class 4, there's been some sort of consolidation of classes, but by and large, they've all retained the same class rates that they have now. The B and B is the main sort of change, and even that's not as big a change as it was before. So I think I'll leave that at that. Obviously, we'll take questions, and Mr. Clayman will talk to the calendar parts of the.
Thank you, Mr. Hines. Mr. Clayman.
Mr. Chair, members, I think I would just highlight the only change from the other property tax reform working group bill that Representative Whalen brought forward and amended in committee, and that's in section 33. The senior deferral application deadline in the initial bill was moved actually from July 1 to, I believe, May 1 in the bill that was heard in committee, and that has changed in this version. The deadline moves from July 1 to November 1, and that conforms that date change with the date change that was in the Petersburg senior deferral bill, which is in Article 3. And Mr. Chair, I think we'll move on to Article 3, the aids and credits article. So Section 1 is that Representative Petersburg bill mentioned earlier regarding senior deferral. That's significantly different from how it was heard in committee. The only provisions from that bill that were kept were the provisions relating to the due date and the pre-application language. There's also some additional language that requires the Commissioner of Revenue to state the reasons for an application denial and just remind the senior deferral applicant that they can amend and resubmit their application prior to the new deadlines stated in that provision. And I think I'll turn it over to Ms. Dalton for Section 2.
Thank you, Mr. Clayman. Ms. Dalton.
Mr. Chair, members of the committee, Section 2 actually deals with two bills that were introduced, one by Representative Hansen, one by Representative Mary Murphy, dealing with one-time payments, $97,000 to the city of Hermantown, and Representative Hansen had asked for $150,000 to the city of Lilydale to help with sewer costs. That's been turned into $25,000 a year for 6 years, which is identical to what we did for the city of Mendota for a sewer project in the past. Sections 3 to 6 are essentially House File 4403 as amended. However, the language has been modified, so we are referring to undocumented aliens and using the language that and definitions that are used in the IRS tax code. Section 6 relates to Mille Lacs, and I will let Mr. Clayman describe it.
Thanks, Ms. Dalton. Mr. Clayman.
Mr. Chair, members, Section 6 is the Mille Lacs property tax abatement bill that was heard in this committee in 2017. It's substantially the same as when it was heard. There's one change in the qualification requirements, which moved in the version that's in the division report from requiring documentation of a 5% reduction in any 2 successive years since 2010 to documenting a reduction of 5% in between any 2 years since 2010. And I can go through the subdivisions of that provision in more detail if the committee would like, or just turn it over to Ms. Dalton.
Thank you,
Do
Ms.
that for
Dalton.
now.
Mr. Chair, members of the committee, the last section in that article is a repeal of the extra aid paid to the city of Minneapolis to pay library bonds. The summary and the bill actually has the wrong effective date. It should be effective with aids payable in 2018, and that will be included in the author's amendment. Article 4, a lot of this was included last year in the Property Tax Division report. It is not the Property Taxpayers' Bill of Rights, but it deals with requiring counties, cities, and school districts to hold their referendum related to property taxes, debt, and spending on the first Tuesday, either the first Monday in November of an even or odd year. In 2017, a law passed in the elections bill that limited all elections, municipal and school elections, to one of 5 dates. And so that remains true for any elections not related to property taxes, debt, and spending. The main provisions are actually in sections 2 and 3 as it relates to that. The other 2 bills that are included in this article are section 4. This is Representative Vogel's bill, House File 1146, basically requiring a public notice, hearing, and reverse referendum in the case of a franchise fee that is covering more than just the cost of providing the utility services linked to the utilities. And then Section 7 is Representative Runbeck's bill, House File 112. And this provides a reverse referendum when a city, excluding a first-class city, enters into a lease of 3 or more years for real property with an HRA, Port Authority, or Economic Development Authority as a way to kind of get around bonding requirements. That's pretty much all of that. All the remaining sections in that are really dealing with special laws or one-time, referendum issues dealing with just like one individual city or county. Section 5, our miscellaneous section. Sections 1 through 5 and 10 were in last year's bill. This is Representative Drazkowski's prohibition on spending on the zip rail, and the language here is the language that was in the conference committee report as it came out of conference committee. Sections 6, 7, and 8 and 18 are a repeal of the political contribution refund program. Section 9 is Representative Sarah Anderson's bill requiring Hennepin County to share a portion of its local transportation tax with Maple Grove and the city of Plymouth. Section 11 is Representative Garofalo's bill that allows district heating projects owned by for-profit entities to also qualify for the bond allocation. Sections 12 and 13 are the St. Cloud liquor and food and lodging bills that were heard here, and they went in as amended in committee, and it does require a general approval at a general election before the city can increase these taxes. Section, I'm going to defer to Mr. Clayman at this point for the TIF.
Thank you. Mr. Clayman.
Mr. Chair, Section 14 is the Minneapolis Upper Harbor TIF in North Minneapolis. Representative Lee bill, and then Section 15 is the Champlin TIF for their Mississippi Crossings District, the Representative Uglum bill. And Section 16, I will go back to Ms. Dalton.
Thank you. Ms. Dalton.
Mr. Chair, Section 16 cancels $3.4 million of a balance in one of the Department of Revenue accounts back to the general fund, and the balance is in the local sales tax administrative account. Section 17 appropriates $5,000 to the city of Mazeppa and to Wabasha County in total to deal with property tax abatements and other costs associated with the fire on March 11th, 2018. And as I said, Section 18 is part of the repeal of the political contribution refund program.
Thank you, Ms. Dalton, Mr. Clayman, and Mr. Hines.